morning, everyone.
Good morning, sir.
I think we have 11 people, so we'll start. Okay. So today we'll be starting with the next part or the next important aspect of another head of income or another source of income, and that is what we call as income from business and profession. One of the most important part as far as computation of tax is concerned, because you have a lot of provisions here, a lot of provisions, a lot of things have to be taken care in this particular aspect of income from business and profession. The reason being, here whenever we are talking about business, please understand one thing. Whenever we are talking about business, we are talking about two things. Okay, one is in fact we are talking about three things. One is a sole proprietor. Okay, next we are talking about a company, that is a private limited company. Okay, and then here we are talking about a under company we have two parts. Here we are talking about a private limited company, and here we are talking about a public limited company. And next we are here talking about a firm. Firm in the sense a partnership firm. So whenever we are talking about business, these are the three aspects that we have to take into consideration. We have to understand how to do the tax treatment for an individual proprietor who starts a small time business. How do you compute his income? Next, if it is a company, whether it's a private company or whether it's a public company, that is what we have to check. And then if it is a firm, if it is a partnership firm, how to do the treatment. Further, if it is a partnership firm, whether it is a limited liability partnership, LPP, okay, whether it is a limited liability partnership or a unlimited liability partnership, right? Unlimited liability partnership. So all these things is what we have to understand as far as the income from business is concerned. Okay, always remember, whenever the word business comes into picture, one of the most important documents that we need to have, we need to have a profit and loss account. So without a profit and loss account, we cannot really compute what is the income related to business and what is that particular income which is not related to the business. What is that particular expense which is related to business? What is that particular expense which is not related to the business? So for that reason, having a correct profit and loss account is very important for us to understand income from business or how to compute income from business. On the other hand, when it comes to profession, a, a person who is a professional, when I'm talking about a professional, I'm talking about a chartered accountant. Okay, I'm talking about a concept called as lawyer. Okay, a lawyer, a doctor. Okay, then a chartered engineer. Okay, a chartered engineer, CER, that is chartered engineer, a management consultant. Okay, so all these people are professionals by their nature. Okay, so whenever a person is in a particular profession, okay, he will not have a P&L account, he will always have an income and expenditure account. He will always have an income and expenditure account. So if he has an income and expenditure account, we have to understand what are those income which are related to his profession and what are those incomes which are not related to his profession. Likewise, what are those expenses which are related to his profession and what are those expenses which are not related to this profession. So this particular module is quite exhaustive. We have to study very deep in all these aspects, and then we have to understand or come to a conclusion as to what are the permissible deductions that are eligible for a business and a profession, and what are those particular deductions which are not applicable, right? So everything we have to understand as far as income from business and profession. That's the reason I said it's a very, very exhaustive module, and you can expect in your final exam, you can expect around 30 marks to come only from this particular section. Okay, that is income from business and profession. So you understand the magnitude of this particular module itself. 30 marks comes directly only from this particular module. right? So you understand that there is no option for you to leave this particular module and study something else. You have to study this particular module because straight away 30 marks are at stake, which is not a joke, right? So my sincere request to all of you is please attend all these classes, and it is very important for you to understand income from business and profession. Clear with this? Now, let us start step by step. What we are going to study in this income from business and profession? First thing is we are going to study the method of accounting. Okay, so what is the method of accounting that we have to follow, and then accordingly we have to understand how we should take values from those particular accounts, right? Now, whenever any company prepares accounts, it will prepare accounts according to company law. Okay, I think all of you know that any company which is registered in India has to come has to follow the Companies Act of 1956, and there are certain provisions as far as how the accounting should be done as far as any business is concerned who is registered as a company. In such case, every company will prepare its books of accounts according to Companies Act. Okay, so will prepare their books of account according to Companies Act 1956. But in income tax, we don't have to use companies law, we have to use income tax act. So the method of accounting changes a bit, and that is what we have to understand in terms of the income from business and profession. Next, we are also going to discuss what are the permissible deductions and permissible allowance. See, what happens is whenever you run any business, you are expected to make certain expenses which are necessary to run the business. If you don't make those expenses, or if you don't incur those particular costs, you cannot run your business. So there might be some expenditures which is mandatory for you to run, which is mandatory for you to incur, and there are those expenses which are not mandatory but still you have incurred and put it in the name of the company. So we have to understand which are the permissible deductions for business and which are the permissible allowances for the business. Those things have to be subtracted from your total profit, and if you have put some expenses which is not related to your business, then all such expenses have to be added back to your income. I'll give you an example. Suppose I am in a business, I'm in a profession of cleaning of garments. Okay, I'll take an example. All of you know in Belgaum there is a chain of laundry called as garment cleaners. I hope many of you know this. There's a chain in Belgaum called as garment cleaners. They just wash your clothes, dry clean your clothes, iron your clothes, and give it back to you. So it's a chain, right? Now, suppose that I am a owner of this particular garment cleaners, and one of my friend, okay, one of my friend has come from US, and because he has come from US, I take him for a party. I make an expenditure of 10,000 rupees in a party for him, okay, and put this expenditure under my P&L account. So in my expenditure of this garment cleaners, under this P&L account of garment cleaners, there's an entry which shows 10,000 rupees. And what is this entry? This entry is relating to you know party given to a friend who arrived from US. Party given to a friend who arrived from US. Okay, now this expenditure of 10,000 is not related to my business. If I had not given if I had not given this party, will my business get affected? No, my business will not get affected. But what I have done to reduce the profitability of my firm, to reduce the profitability of my firm, I have debited 10,000 rupees in this particular account. So we have to take into consideration what are permissible deductions and what are non-permissible deductions as far as business is concerned. Okay, next we have to understand what do you mean by the word deemed profits, a very important concept. Okay, what do you mean by deemed profits is what we have to understand. And also we have to understand what books of accounts have to be maintained. Okay, whether it is mandatory to maintain a sales register, whether it is mandatory to maintain a purchase register, what are the various books of accounts that we have to maintain. All these things we have to understand. Then we are going to see how to arrive at depreciation, and here we are going to see problems and theory as far as depreciation is concerned. Because when you say business and when you're talking about a P&L account, there is one entry that constantly keeps on coming, and that is depreciation. Okay, though we call depreciation as an expense, it is not really an expense, it is just a book entry. The money is with you only. So how do we deal with it, and how do we treat that particular depreciation as far as income from business and profession is what we are going to understand. Next, there are some certain provisions, special provisions given under section 44 AD, 44 AE, and 44 AF. Okay, this is related to transport. This is related to civil construction. This is related to retail business. So, what are those sections? How do we use those sections? What are the benefits of those sections? We will see as and when we come to that particular part. But as of now, understand that you have to study something called as 44 AD, 44 AE, and 44 AF. And last part is, of course, uh, we have to understand problems on computation of income from business and profession. Okay, further down here we also have to understand how do we compute income from a partnership firm. Okay, partnership firm. Okay, then in case incur a loss, in case we incur a loss in certain businesses, how do we set off that particular loss? That is called set off of losses. Set off of losses. Okay, and if you are not able to set off these losses, how do we carry forward these losses to the next year? So this is carry forward. This is what we are going to understand in the upcoming classes. So how do we carry forward the losses, and to how many years we can carry forward these losses? So all these things we are going to study under the head income from business and profession. Clear? So what I have done is, right now I have just introduced you to the concept of income from business and profession. I have not told anything. I have not started with the syllabus of income from business and profession. I have just told you what is that we have to study. So when you look at the slide itself, it is jam packed with so many markings and whatever I have written. You can understand really how big and how important this particular unit is. So again, my sincere request to all of you, don't miss classes here, because if you forget something what has been taught in the previous class, it is difficult for you to comprehend that in the next class. Clear with this? Any doubts in understanding the first slide? Any doubts in understanding the first slide, please?
No, sir.
Okay. Now we come to the introduction part of income from business and profession. Okay. Now, first part, let us try to read this and then we'll go through it. Otherwise, I'll do one thing. I will allow you to read it. Please go through these 5 points. Okay. And then if you have any doubts, we'll discuss these 2 points. Especially the doubts will be under fourth and fifth point. Anyways, just go through this, then I'll keep on discussing it. So basically, this slide tells you how do we arrive at the profits, or how do we arrive at gains. So there are a company always has sales. Okay, so sales minus expenses. Here we have to understand what are the permissible expenses, what are not permissible expenses, and when you give a treatment to these permissible and non-permissible expenses, we arrive at profits. Okay, so how do we treat this profit? What are the various aspects of how we treat these profits? Everything we are going to understand. So point number 4 and point number 5 talks about what are eligible expenditures, what are eligible deductions that we can take, and what are not eligible expenses which cannot be taken as far as business and profession is concerned. So this slide basically talks about these two important points. Next, we go ahead and discuss what do we mean by the word business, okay, and what do you mean by the word profession. So, in business clearly says business means trade, buying and selling. Whatever you buy, anything that you buy, if you are buying it and selling it, it is a trade that can be categorized as business. It can be a commerce. Okay, commerce means again buying something, adding value to it, and then selling it on to the next person. That is a commerce. Okay, if you are engaged in the process of manufacturing something which is worthwhile or which has some market value, that is also called as a business. Or any adventure, or concern in the nature of trade of commerce can be considered as a business. Clear? So anything that you do to earn money, which is not a job, anything that you do to earn money which cannot be classified as job, that is what we classify as business. Very simple. Are you able to get it? Next, when we come to the word profession, okay, profession means professional people, or the word profession comes into picture whenever one takes a systematic study of something. When any person takes a systematic study of something over a period of time, develops expertise, okay, develops expertise in that particular subject, and then puts his knowledge to earn money, puts his knowledge to earn money, that activity is called as profession. For example, a lawyer, he has to understand the law, okay, so it takes time. Then he has to practice it, and over a period of time he becomes an expert in that particular field. And after becoming an expert in that particular field, he starts earning money from that particular field, and the money earned from such an activity, we call it as the word profession. We call it by the word profession. Clear? Take the example of a doctor. He has to spend at least 6 to 7 years of his life in learning. He gains experience, he becomes an expert, puts his expertise into practice, earns money, he is called as a profession. Same is the case with a chartered accountant. Studies, passes CA exam, practices CA under someone else, becomes an expert, starts earning money on his own, we still call him as a profession. So the word profess means acquiring knowledge, a systematic knowledge over a period of time. And then you develop certain skills and attributes that generates income for you. That is what you call as profession. Some people may not take formal education. For example, there is a painter, okay, there's a painter or there's an artist. He may not have a formal education, but he has got an inborn talent. He has got an inborn talent, and because of this inborn talent that he has, okay, he's able to make money out of it. Even that is also called as a profession. Clear? So you need to understand between these two words, what do you mean by the word business and what do you mean by the word profession. Any doubts in understanding this?
No, sir.
Through? Okay, now we come to how do we assess income from business and profession. The general principle that we have to take into our consideration is, okay, whenever we are charging income from business and profession, it must be carried on by the assessee. Assessee is a person who is liable to pay tax. Okay, so that activity has to be carried out by that particular assessee. It cannot happen, okay, that you are doing some business, okay, and your father and mother is paying tax for you. That is not permitted. If you are doing business, that means you are an assessee and you are liable to pay tax. Your parents are not liable to pay tax. Please understand that. So must be carried out, income or professional activities must be carried out by the assessee itself. That must be carried out during the year. Okay, profits or income generated in the previous year only is to be considered for tax. Okay, and profit should be taken in commercial sense. What do you mean by this word commercial sense? Can anyone explain to me? Can anyone tell me what do you mean by profit should be taken in commercial sense? What do you mean by the word commercial sense? Commercial sense means it should have value. It should be monitored. It should be in monetary terms. You should be able to count it. That is what we call as commercial sense. Say for example, okay, I come to your house, I clean your house. Okay, I come to your house, I clean your house. Okay, and instead of giving me money, you give me a pair of trousers and a shirt. Generally this happens. You might have seen people doing this. A person comes to your house, you ask him to clean your house, he cleans from the morning to evening, he cleans. Okay, you give him food, you give him tea, coffee, and at the end of the day, instead of giving him money, You pay him, you give him a shirt or a trouser and ask him to go, because you equate the value of this shirt and trouser to, say, let us say 500 rupees. So you say that you have done work worth of 500 rupees, and that is the reason I am giving you money worth, I am giving you something worth 500 rupees. This is not permitted in income from business and profession. When we say it has to be in commercial terms, it has to be 500 rupees. That is where it makes sense that you have earned that particular income. If you just give a trouser and a shirt, that is not what we call as commercial terms, or that is not what we call as commercial sense. Getting my logic here? Any doubts in understanding the concept? So whenever we have to compute income from business and profession, money has to be there in commercial terms, money has to be there in monetary terms. Only then it is eligible for deductions, it is also eligible for taxation. Any doubts in understanding this concept, please? Any doubts in understanding this concept? What do you mean by the word commercial
No,
sense?
sir.
Okay, next.
So,
Yeah, Mrunali, any doubts here?
No, sir.
Rohin?
So in commercial sense, like the weight should be there, like only the value should be considered, sir. Like money should be considered,
It has to
not
be
like a barter system.
no barter system. You should be able to value the money, right?
Yes, sir.
You should be
So
able to.
here we have to consider the money value.
Here you have to consider the money value. That is what I'm saying. Value has to be
Okay,
considered.
okay, sir. Okay, sir. Yes, sir. Yes, sir.
Next, whenever
Yes, sir.
we are discussing about income from business and profession, there are two things that we have to take into consideration in the accounting terms that we have to take into consideration. Okay, the first is whether the transaction, whether the business that you are going to tax, whether that business follows a cash method of accounting system or whether it follows an accrual system of accounting method. Okay, so cash system is nothing but it is based on receipts and payments. It is based on receipts and payments, whereas accrual method of accounting is based on whether something is due or something, some provisions have been made. Okay, now you might follow any of the accounting system. You might follow a cash method of accounting system or you might follow an accrual method of accounting system. But for income tax, for income tax, whichever is earlier is important. You follow anything. Okay, just a minute. Income tax says you follow any method of accounting. We are least bothered about it. Whichever is earlier, whether you get an order first to process something and you get an advance, so we'll consider this as an income. Or else, if you don't get money, but if you have just got an order, we are still going to consider that this amount as an income. So whichever is earlier is what income tax is going to consider. Clear? Next. Please go through this particular slide. This slide basically talks about what are the things, the scope and chargeability of income. Okay, so just go through this. Yeah, any doubts in understanding this?
So fourth point.
Okay. See, what does fourth point say? Any compensation received in connection with termination, modification of the contract relating to management of affairs of an Indian company. Okay. Now, what does it say? It says that suppose, okay, suppose you are a, let's say, I'll give an practical example. Okay, Rohit. Suppose you are Cisco Systems. SISCO. You are Cisco Systems. Okay, and to manage your affairs in India, you appoint one company called as TCS. So you have a contract with TCS, say stating that whatever is the software support that you require in India, that entire software support is going to be provided by TCS. So this is a contract that you have entered into, and every year the contract is going to be renewed. Every year, Cisco Systems, that is Rohit, you are going to pay TCS. Okay, let us say 10 lakh rupees every year. Clear? So this is the contract that you have. So you have a contract for first year. First year goes on well, no problem. Second year, there is a problem between you and TCS. Okay. Second year, there is a problem between you and TCS. And for some or the other reason, you don't want to continue with TCS. So you want to terminate the contract, or you want to change the terms and conditions of the contract. So whenever you terminate the contract or change the conditions of the contract, a certain money is going to be rewarded. A certain sum of money has to be paid to TCS. Okay, to prevent losses. Any amount that you pay to TCS will be called as income for TCS. Any amount of money that you pay to TCS is called income for TCS. Whatever it is, whether it is you don't want to continue with TCS, you want to terminate the contract, so you pay a lump sum money and get out of the contract, or you want to continue with TCS, but you want to change the modifications, you want to change the terms and conditions of the contract, and that is the reason you have to pay certain money to TCS. Whatever you do it, okay, but it is related to an Indian company, that is TCS, and that is the reason whenever you pay money to an Indian company, that will be called as income for that particular company. Getting it?
Yes, sir.
Any other thing? Now all these are nothing but uh, heads of income, which can be called as income from business and profession. There's a list, exhaustive list. Please go through this particular list. Okay, if you have any doubts, I'll explain to you. Okay, there could be doubts in excise and customs. As and when we come to excise and customs, we will. I'll let you know that. Okay, but just go through this.
So,
Yes.
so that excise duty on the excise duty is levied on that manufacturing products. No, so when from the industry that manufactured products come out,
Right.
that time the tax is levied on that. Yes. Then custom duty is like from one country to another country when we are like uh,
Importing.
sending the products. That time custom duties. Yes, sir, imported or exported of the goods.
Yes. Yes.
So that custom duties percentage is 2% or it has been changed. So
It is in some cases it is 2%. In some cases it is 8%.
yes, sir, yes, sir.
Okay, so that
Eight
depends on
percent.
what is the
Okay,
nature
sir.
of goods. So when we come to indirect
Okay,
taxation,
sir.
that time we'll understand.
Because
That time we'll understand what is
yes, sir.
excisable goods. In fact, now there is nothing called as excisable goods. Everything comes under goods and service tax (GST).
Yes, sir. Yes, sir. Goods and service tax. GST. Yes, sir. Yes, sir. Thank you, sir.
So basically, to just summarize, this is off the track, but just to summarize, GST is nothing but, okay, it's a combination of three laws: It's a combination of excise law. Okay, it's a combination of
VAT,
VAT,
value added tax.
and it is a combination of service tax. So when you combine all these three, whatever comes, that is GST, goods and service tax.
Yes.
Yeah. Have you gone through this particular slide? Have you understood all these meanings, especially one, two, three, 4, 5, all these things?
So that fourth point, any profit on transfer of duty
Which one?
the fourth one, so the passbook scheme.
Okay. And what happens is when you earlier, when you, uh, okay, Rohin, I'll give you an example. Can you see this?
Yes, sir. Yes, sir.
Suppose I'm in the business of
Yes,
manufacturing
sir.
these types of bells, call bells. Okay, I'm in the business of manufacturing. So I'm a manufacturer. And the moment I manufacture and I send these goods outside my factory premises, I am liable to pay excise duty.
Yes, sir.
Right? Now, when the truck or the inventory moves out of my factory, I am liable to put a excise duty on it and then pass it on to the next person, pass it on to the buyer, right? Now this particular buyer that who is going to buy these bells is not in India but he is outside India. So in other words, I have to export all these bells. In other words, I am going to export all these bells. Are you able to understand?
Yes, sir.
Right? Now, the law in India says that if you want to export goods, there is no tax. If you want to export goods, sorry, if you want to export goods from India to any country, there is no tax. But on the other hand, if you are importing certain goods from other countries, you are liable to pay tax. Are you able to understand? If you are importing
Yes,
from
sir.
other countries, you are liable to pay tax. Now here what has happened, you have, since you have already paid the tax, and after paying the tax your goods have gone for export, this money this money is lying with the government, which you are supposed to get back, which you are entitled to get back. Why? Because this bell was not used or consumed in India, this bell went outside India. So in other words, you have earned foreign exchange for India by exporting goods from India. And because government wants foreign exchange, okay, they give you a benefit on tax. But now the problem is, since you have already paid excise duty and you have already exported, this entire money that is there as excise duty is with the government. So what the government does, the government will record all these transactions into a book, and that is what we call as duty entitlement passbook scheme. So after a certain number of years, when the amount matures to a certain level, okay, the government says hereafter you don't have to pay tax because the money is lying with us. The money is lying with us. Say for example, the total of money lying in your passbook is say 10,000 rupees. So what the government says, the government says that we have 10,000 rupees received from you in the form of taxes, in the form of excise duty. And since you are into an export business, you don't have to pay tax. So what you do is, this much amount of money is lying idle in our account. Either you are eligible to take this money back or claim a refund, or whenever you sell your goods in India, whenever you sell your goods in India, you can take a benefit of 10,000 rupees from this particular duty entitlement passbook scheme. That is the meaning of it. Now getting the meaning of it?
Yes, sir. Yes, sir. Got it, sir.
So these are the various heads of income, and any income that you receive from all these points will be called as income, income from business and profession, and you are liable to pay tax on all these incomes. Clear? Now I'll just go to this particular slide and then we'll stop it. Now, even speculative transactions are also considered as income. Okay, speculative transactions are also considered as income, except these conditions. And what are these conditions? Please try to understand. Okay, whenever you know that you are going to face a shortage of raw material, okay, whenever you experience a shortage of raw material, you suddenly buy huge quantity of raw material and keep it in your godown. Okay, here your intention is not to buy raw material at a lower price and sell it at a higher price. That is not your intention. If that would have been your intention, then you would have been called as a speculator. But here your intention is not to speculate but to safeguard yourself against any adverse movement of raw material prices in the near future. That is the reason you purchase a huge amount of raw materials in the initial stage or when the prices are low, hoping that the prices will rise in the near future. I'll give you a common example. What is happening to the edible oil? Edible oil that is there in India, okay, is an example of safeguarding of future price. 15-liter can of oil, whether you call it Freedom, Fortune, Rice Bran, Dhara, whatever you want to call it, okay, whatever brand of oil you call it, okay, the price was 1450 rupees per 15 kg of oil bag. Okay, this was around 1 month back. Today the same oil pack, the same 15 kgs of oil, okay, in the market is today at 2000 rupees. Now when you anticipate that festival season is arriving soon, it is better if I stock oil, then it would not be called as speculative transaction. But on the other hand, if you do this type of a business on regular basis, then it leads to speculative transactions. Are you able to understand the meaning of it? Clear? So this is what we have to understand, whether we have to classify whether the nature of business is a speculative transaction or whether the nature of business is a non-speculative transactions. In other words, whether the nature of business is a hedging mechanism. So if it is hedging, it will not be called, it will not be charged as income. But if it is a speculative activity, definitely it will be charged as an income. We'll stop here, and in my next class, we'll continue from where we have stopped. Okay. I request everyone to come in the video mode, please.
Excuse me, sir. Excuse me, sir.
Yes.
So that investment management assignments, I think Sushmita is alone. So like she don't have any group. So she was asking me whether any group has only 3 members or what.
Any group has 3 members here?
No, sir. Like only there are, as you have said, 9 groups. They have given name of 8 groups, sir. So one more group I don't know, sir.
Just check. I'll
So she,
pray.
yes, sir. So she has
Vishnu is
called
there
me
in
and she
any of
was
the groups?
asking me. Yes, sir. He's there.
Okay. Sushmita, is it Sushmita Mane or Sushmita Baragli? Who is remaining?
So Sushmita Bargari, I think.
She's not there in the class also. Sushmita, are you not there with
She
any
was there.
associated with any of the groups?